Welcome to the Double Shot. I'm James Fitzgerald and I'm joined today by our regular fill-in, fast becoming the crowd favourite, Mitchell Scale. Welcome, Mitch.
Pleasure to be back again in the seat, James, so thanks for the call-up.
Well, we're recording on a Monday arvo because Alex has given us the Sunday night text to say she's mistakenly thought she was getting back on Tuesday and it turns out it's Wednesday and needs you to fill in.
Look, rumour would have it no business class available on the Tuesday flight. So opted to wait till one became available as our girl.
Can you confirm nor deny whether you had a run sheet running in the event that this was likely?
Mate, I'll have a run sheet running every week. At any given moment, I'm here.
Tell you what, we're not having a double shot today, but because it is the afternoon and we want to sleep. But tell you what, courtesy of someone in this office, there was a packet of Oreos just sitting in the communal kitchen.
Yeah.
We've pocketed them and having a little warm drink with an Oreo for a Monday arvo.
Great afternoon to be a double shot, not so good to be an Oreo.
Hey, Com Games, let's go
how
there.
How good's that been?
Oh, the Ollie and Bolly show. How good was that
mate,
in the last 24?
800 metre Peter, my man. Jeez, just needed an extra 10 metres, our man. So how good was that? And I'd arguably say that Ollie's run was as good as I've seen in my life.
Correct. For those not familiar, Ollie Hoare is a male runner who won the 1,500 metres. First time that we've taken out that event since 1958. Herb Elliott won that for Australia. So it's not been an event that we have featured in very frequently over the years. And he came from nowhere, 4 deep at the start of the last 100 metres, and he's just powered home. You cannot watch that without getting far too excited.
Oh, mate, it was so good. And Peter Bowl, very admirable silver medal.
In the 800 metres,
in the 800 metres, yeah.
Peter Bowl, he's a bit more of a household name, I think, than Ollie.
Well, yeah,
Hoare.
I'd never heard of Ollie Hoare until
neither.
this.
No,
yeah,
no. So Peter Bowl, he came fourth in the Olympics, silver in the 800. Another great race, though. The Aussies have killed it. I don't know. Like the first week, I thought swimming, it's going to fall off the edge of a cliff. Yep. But it's kept me going and engaged for the second week. What sort of caught your eye?
Mate, I loved the Diamonds netball team winning our 1,000th gold medal. That was fantastic this morning.
Yes.
And the only team to ever do that who lost during one of the pool games to, I think Jamaica actually beat them in the pool games, and then they went on to win against Jamaica, defeating them 55-51. And something that caught my eye, which was not so fortunate for our friends over the pond, the poor old soap dodgers, the English.
The soap dodgers, mate, costing us listeners.
So apologies. That's a healthy banter between two great countries, but they were disqualified after winning. So this is the 4x400 metres women's relay, the last event of the games, and they had run the race. It was literally a photo finish. England got the nod, did a victory lap, and then upon return got told that they were disqualified for a lane infringement in the first leg of the race. So medal stripped, Canada gold. Crazy stuff.
I hadn't heard about that. I missed that. I might go and track that down. I don't know. I've got the 7 Plus app. It is one of the great apps. And I have no affiliation with 7, obviously. But it is actually a very...
Weren't you in their box a couple of weekends ago at the footy?
Oh, unrelated. But no. The app is very good. You can watch pretty much every event on replay. So I'll go track down the 4x400. I wouldn't watch this event in full replay because it goes for a couple of hours. But the cycle for the women, the road race, very, very good. If you can catch a little highlights package, it is amazing. I did not know how much tactics and how much of a team sport the road race cycling is. Watch the female one. Aussie wins it, Georgia Baker. She's got 4 other girls that are in the team with her who literally just take turns of carrying her on their wheel. So they just burn themselves out so that she can draft off the sort of wind channel behind them and just sacrifice their own race to let her basically have a sprint to the finish for the last 5Ks to try and win gold medal, which she does.
And she did.
Yeah.
How good's that?
Unreal. So been a good week.
Been a great week. Been a fantastic week.
And I was over in Sydney, ran past the new Crown Casino.
Yes. How was that?
Treated myself to a little run on the Friday.
Yeah.
Well, I saw the signs were out that it is opening so I was there Friday morning. It was opening that weekend.
Yes.
The Crown Casino. So I don't know. Feels like it's been finished for a while. There's been some debacles around their license. They got in a bit of trouble, Crown Casino, but it has opened.
Well, not to everyone it hasn't. Not to everyone it hasn't. You have to be someone to get in there. I was reading that it's currently only open to VIP members.
I did see that.
To invitation only, or you have to submit an EOI online to effectively get assessed before you're allowed in. So I don't know what you've got to pony up to on a bet to get a gig at the Crown Casino, but I'm thinking it might be substantial.
Tell you what.
Well, yeah, apparently it isn't. It isn't a big casino. There's something like 2 levels dedicated to it.
Yeah.
One of those levels only has 12 tables. It's what they call the 12 Sky Salons or saloons. I'm not even sure what the term is. And then you got the Crystal Room and the Mahogany Room.
Yes.
Both of which sound expensive.
All of which sound expensive. You're not getting in there if you're just a casual punter, I wouldn't have thought.
No, but look, it is fantastic for Sydney. $2.2 billion, one of the biggest, easily the biggest and most expensive casino that's been built in Australia to date. The Crown Casino cost $1 billion down in Melbourne, albeit that was in the late 1990s. So in dollar for dollar terms, adjusted for inflation, Crown Melbourne's probably slightly bigger, but there is already an existing license and casino in Sydney. So this is just a second casino exclusively for the high rollers. Impressive building and no doubt lots of fine dining and restaurants sitting underneath. So go check it out if you're in Sydney.
Mate, speaking of fine dining, one of my favourites, Domino's. They're diversifying into cheeseburgers, I'm told. What on earth's going on there?
So I'm just eating an Oreo. I saw that.
Mid-eat.
So they're creating an arm to their business called the Burger Joint, which is going to offer a pizza version of a cheeseburger. It's going to have beef burger pizzas, American cheese slices, mozzarella and butter pickles, topped with a special burger sauce. They, however, are doing this to try and compete with McDonald's and grow even further because they've had a big run over the last 10 years, haven't they?
Absolutely. I think so. Going back to 2014, Domino's, obviously a publicly traded company, you could pick up a share there for $16 they were trading at. By 2017, they jumped to $74. So that's significant growth over a 3-year period, 16 into 74.
I've got to wonder what happened.
I don't know.
Like nothing significant.
No.
You can understand that maybe in the pandemic where people want to eat
getting
pizza at home or
takeaways, getting
something.
deliveries. Maybe we're getting lazier. I don't know, but either way, March 20 took a bit of a hit, dropped down to $58. Obviously, that was consistent with what was going on at the time at the start of COVID, but then rebounded by September 2021, $161.
What?
161 schmackaroos for a share at Domino's.
Or in other words, from September 14, it had gone from $16 to 161.
Yes.
So it had gone up by 10 times.
Mate, it has. And then, consistent with the stock market at the moment, has had a correction and currently trading at 71. But even if you bought in 2014, you're still doing exceptionally well today based on current share price.
Up and down like a yo-yo.
Yeah.
I can't put my finger on that. I do know that they have a big plan all throughout the world. So there's a a Domino's Australia, and then there's a Domino's UK and US. And the US are trying to get a drone delivery service off the ground where each pizza gets delivered by a drone.
Wow. Maybe still some value then in the in the share price.
We have no idea. So if you're making a estimate or guess on investing in Domino's, certainly don't be doing it because we tell you so. Go and get a qualified opinion. But very interesting though that they're branching into burgers. I'm not sure about it, to be honest.
I don't know. Like I reckon you should try one.
You should try one.
I should steer clear is what I should do, but I'm probably not going to. But hey, guess what? I have brought a bit of a stat fact for you this intro.
Play the stinger, Nico. We might even get a shimmy out of the man.
Play the stinger.
Stat fact. The stat man.
Stat fact.
So shimmy again. Come on, mate.
Look, not a shimmy yet.
At least you brought the fact.
I did bring the fact. So it's about how much we're saving and how much we're spending. And so I'm going to talk to the current cash rate today. Sits at about, sorry, not the cash rate, the savings rate today sits at 11%, right? So of every household dollar earned, we're banking 11 cents.
Not bad.
Now, StatFact into a little bit of a pop quiz as well. What do you think it was prior to the pandemic, right? So before COVID, what do you think the savings rate was?
Go playing the thinking music. It's literally what it sounds like in my head. I'm going to say 15%.
Oh, so higher than what it is today, you reckon?
Well, yeah, interest rates are going up.
That's what I thought. It's not. So prior to COVID, our savings rate was at 7%. So for every dollar a household was earning, we were saving 7 cents.
Interesting.
Which is surprising, but it did get as high as 23% during COVID, which makes sense.
Wow.
Obviously, you don't have anything to spend your money on. You're not traveling. So 7% pre-COVID up to 23%, and currently today sitting at about 11%.
Which is pretty good with the inflation that we have had.
Well, I was going to say, for a crisis and all the rest of it, we're still saving money, according to the stats.
Very good by you, Mitch.
So there you go.
That is the next best thing to bringing the shimmy to this show.
Stat fact!
Mitch, I could not quite believe this when you put this in the run sheet this week. Alex, our girl, has got some vindication in the way of her favourite airline, which she promotes unashamedly, Rex, having a decent run.
Mate, having a very good run. So first point of that is their revenue's doubled, right? So their revenue on domestic flights has doubled. Their last 3 months, they were averaging about $6 million in revenue. For the last month, they averaged 13 mil.
Wow.
So just about doubled there. There's some decimal points in there I won't bore you with. They put it down to their load factors on their aircrafts being, up. So their Boeing 737 loads are at 86%. And the planes they use to fly rurally or to, on their rural routes are performing at or are at capacity equal to where they were at in July 2019 pre-pandemic.
Pre-pandemic,
But
wow.
the best thing is, and, Alex always raving about Rex, is that out of every airline, they've performed the best from a efficiency point of view.
Well, she says they don't cancel. They
don't cancel.
Like for them.
And as it would turn out, she's bloody well right. So I was going to say, you throw out 100 bits of information, one's bound to be right from our girl. But
Jeez.
to put some context to that, 80% of Rex's flights over the last quarter had left within 15 minutes of their scheduled departure time. Now, to put that into perspective, Qantas and Virgin over the same period were about 50%, so thereabouts. So almost half of their flights were delayed, whereas only 20% of Rex's were. So Alex, credit where credit's due. I'm still not going to fly Rex, but I can acknowledge that you are correct in that regard.
I reckon Virgin's running it at least, and I only say that because it's typically the one that I have gone with. I reckon it's running at best at a 70% non-cancellation rate from what I'm seeing and experiencing.
Like
30% of cancelling, I reckon.
Yeah, I would say that. I personally haven't been on the end of a cancellation, but
Rex less than 1%. So very, very impressive. Hey, let's talk about house prices. We gave an update last week, had some questions flow through. CoreLogic put some data out, which I thought would dovetail. We had a few people asking about different markets and what we think may happen. And what CoreLogic did is put some data mapping Sydney, Melbourne and Brisbane and how they historically have sat relative to each other. So, for example, today, the Sydney median house price has about a 55% premium to Brisbane, and the Melbourne median house price about a 9% premium to Brisbane. In the past, Brisbane has caught Melbourne, and it has gone very close to catching Sydney, nearly 4/5 of the way by the looks of the data that CoreLogic have put out here. And I thought, look, that's interesting because we have for a long time looked at markets at a macro level and thought, well, does it justify going into those markets? And the benchmark typically has been, what does it sit at as a comparison to Sydney? Because what happens is in Australia, population growth leads to demand for housing. Population growth comes from overseas migrants. They typically land in Sydney and Melbourne. But it also comes from interstate migrants, and they typically leave Sydney and Melbourne for smaller capital cities. And the rationale being that as Sydney becomes less and less affordable, people start to see places like Melbourne, Brisbane and others as being much more relatively affordable, and so make the choice to move there. So Give us a bit of an insight in terms of what historically has that looked like from a numbers perspective for the other cities other than Sydney.
Yeah, so as you said, we look at it relative to Sydney's median house price based on the capital city in question. And if we look at the last 50 years of empirical median house price data, it shows trends in each city as to where they typically sit at a peak in their market relative to Sydney's median house price. To put that into perspective, Melbourne will typically peak at somewhere around 78%.
90, I think. 90 you've got here.
90%. And it's currently sitting at 70%. So, like, for example, based on historic trends, market's still got a bit of legs in it if you're, talking median house price. Brisbane peaks at about 78%, which is where I just got confused there. Sorry, guys. But peaks at 78%, currently sitting at 64% relative to Sydney's median house price. Adelaide sits at about 74% in a peak, currently sitting at 51%. And Perth has actually, I think, overtaken Sydney at one point, but will sometimes get as high as 80%. And currently sitting at around 42%. So that sort of just gives a bit of a gist as to, the capital city markets and where they're sitting relative to Sydney's median house price today.
And it's not rocket science, is it? Like if you look at Adelaide, for example, if you're buying for 50% of what it costs to live in Sydney, I don't reckon you're getting paid anywhere near 50% to work there.
No.
So at some point you rationalise it and say, well, yeah, I might not be getting paid as much to live in Sydney or Melbourne is a bigger city than Adelaide as well. So you start to see that as being more attractive. Can you get a job? Yep, I can get a job and I'm going to get a lot more buying and bang for buck for my dollar.
Yeah, and I think, to use Queensland as an example, we had 50,000 people migrate into Queensland from interstate, so that's called a net interstate migrant. And I would say, I don't know, I'm just speculating, but I would say the majority of those came from New South Wales and Victoria.
Very good. Very good. Now, we talked about the Reserve Bank cash rate last week as well, and we've often looked at New Zealand and the United States as some examples of countries that are slightly ahead of Australia in terms of managing inflation and their job market. Let's talk about the friends across the ditch there in New Zealand. They put some unemployment data out last week.
Mate,
what did we learn from that?
Unexpectedly, unemployment actually rose by 0.1% in the last quarter compared to the previous 3 months. So It went from 3.1 to 3.2 unemployment rate.
Oh, still very low.
Still record lows. But important to note that their wages are growing at the fastest rate that they have since 2008. So they're still trying to manage everything, and they're actually forecasting some potential increases to the cash rate moving forward as well.
Interesting. Well, I think, the interest rates going up, you would think should lead to less and less jobs being advertised.
Yes.
Companies being a little bit more cautious.
Yeah, absolutely. Speaking of jobs advertised.
Yes, well, it's not happening in the US, is it?
Well, I was going to say, the US is in all sorts when it comes to trying to find people to fill job vacancies. And I saw you have some data on that.
Yes, it's the biggest economy in the world. And they have got interest rates at 1 or 2% higher than Australia at the moment. So they're a little bit ahead of us. But their employment market, unlike New Zealand, is not slowing down. And I can't put my finger on why. They added more than 500,000 jobs just in the month of July. So to put that in perspective, there is 500,000 jobs that are vacant today in Australia. So it'd be like filling all the jobs in one go. They've got 11.5 million job vacancies today. That's 23.
11.5 million.
11.5 million. It is just under half of the whole Australian population that they could go and employ with the jobs that are vacant, and 23 jobs to one. And it is important, I think, because what happens in the US does have an effect on what's happening here. As that market starts to cool off, you'll probably see Australia, from an interest rates perspective, start to drop their rates. So I think what it means is we're probably going to see interest rates move again. We saw 0.5% last month. Whether we see 0.5% again, I think we're probably going to see a little bit more in the interest rate increases towards the back end of the year until places like the United States and to a much lesser extent a small country like New Zealand start to just slow down a little bit and we start to see jobs at least flatline. There's not so many new jobs being created because that then leads to people getting paid more, which leads to people spending more, which leads to inflation, which is what the Reserve Bank is there to control.
And it's funny you mentioned the relationship between Australia and the US because you just noted that 500,000 jobs were created. They're in very similar industries to the ones that we're seeing a lot of growth in Australia. And of the 500,000 or thereabouts, approximately 300,000 of those jobs were created in education and health, hospitality and professional services, which I would say is very similar to the sectors of employment that are growing in Australia. Definitely
almost
education.
identical.
Yeah, I was going to say definitely healthcare and education. We had probably administration as the second one, and then professional services. So very similar.
Mitch, I had a few people that found it quite amusing. You talking about Nigel Satterley last week and how he'd been quoted in the papers and that there may have been an ulterior motive. A few people pointing out different examples in their own lives of where they think that might occur. You found another one.
Mate, I love nothing more than to go a layer deeper on an article. And when you see an important CEO or bloke that runs a big company quoted more than 5 or 6 times in an article, you bet your bottom dollar they've got a hidden agenda.
Radar goes on, you
And
reckon?
I found my man this week. I found my man Scotty Hutchinson, who runs Hutchinson's Builders, one of the largest builders in Australia, if not the biggest.
Yep.
Been around for 100 years.
Yep.
And he has been quoted in the media by saying that he thinks that a bunch more builders are going to be going broke, which is fair enough. He goes on to say, though, that as a developer and the way in which, we're starting to see the risk being put back onto builders as the work sort of dries up, that there's no way a developer should be going with anyone other than a big builder that has the financial capacity to move forward. So I reckon there's a bit of a hidden agenda there, and it got me thinking, what's Scotty tender on at the moment that he wants to scare a few blokes off with?
So you had Nigel Satterley last week as talking.
Yep.
Was he talking down the market? So you thought
talking down the market. So yeah,
you were gonna keep your eye out to see whether they happen to buy anything in the next little while.
Yep. So nothing yet, but he'd be definitely negotiating on something.
And so
Scotty's doing the same thing, or Mr. Hutchinson, I guess, is doing the same thing about how the building industry has still got a lot more pain to come, and developers should be wary of who they're partnering up with on projects.
Okay, so if he wins a few jobs and goes on a bit of a hiring spree, he's in the cannon.
Yeah, that's right. And that's not a bad thing. I absolutely love it. I think it's fantastic. So there we go. He's our media user of the week. All right. So as we look around the country, there's certainly still a lot going on in the rental market. I read, articles about people that are struggling to find properties to rent. And if we look into that, it makes sense because
we've got you'd have to have. I've got a couple of mates who are in that process, and their landlords are putting the rent up by a fair bit.
Landlords putting the rent up, several applications per property. So it's certainly tough to find a house to rent. So if we look at, I guess, what's happened from a rental price point of view, over the last 12 months nationally, I think rents have risen by 10%, thereabouts. However, some suburbs have risen more than double that. Typically in a lot in Queensland and New South Wales. So if you look at Undella in Queensland, 23%. That's
like Jimboomba Way.
Jimboomba Way, back of Flagstone. Brighton.
Nearly a quarter in a year.
Yeah.
That is a lot, isn't it?
Over 12 months. Like you can imagine that if you're a tenant and then in 12 months' time your rent goes up 23%, like it's a fair whack. But either way, it's what's happening. Brighton Lassans up 21%. So that's a suburb in New South Wales. Hendra, which is, I think, not far from where you are.
Yeah, just in the north of Brisbane there.
Up 21% as well. Silverdale in New South Wales up 20%. And areas like Semaphore up 20% too.
There's a bunch of them up by more than 18%, isn't
correct, yeah. So we're certainly seeing rents continue to increase as interest rates do as well. And it's often something that's not spoken about a lot. You tend to get all the hype about interest rate rises, but we often don't talk about the other side of that as a landlord and a property owner, which is that your income increases as well.
Well, and also from an investor's point of view, I think we often get hung up in the fact that property prices grow and that's a benefit of investing, is that the price of the property grows and that makes you some wealth. What often does get missed, I think, is rents grow as well. And in fact, I think we mentioned this a couple of weeks ago on the podcast, rents have gone up by 2% above inflation for the past 20 or 30 years. And in fact, today, rents are going up, what'd you say, 10%, inflation 6%. Yeah. So rents are going up by 4% above inflation in today's terms. Question for you. What do you think? If rents, if inflation, so the average inflation over 30 years has been 2.5%.
Yep.
If rents went up by 2% above that,
yep.
Let's say, I'll use some round numbers. You buy a $500,000 property and it rents for $450 a week.
Yep.
If your rent goes up for 20 years at 4.5%, what do you reckon the average rent is at the end of year 20?
$450 going up 20 years, 4.5%. Geez, putting me on the spot with some mathematics here, and I'm more relying on my calculator. But I reckon you'd be looking at about, I don't know, call it $900 a week.
Not far off. It's a touch over 1,000. It's about $1,040 bucks a week.
Yep.
Which seems ridiculous, right? Because you think it's 4.5% a year. But if you're doing it every year for 20 years,
compounding,
and it's compounding, so it's going up on the new figure. So 450 up 4%, and then it's 4.5% on that new figure. So where you end up is in year 20, that first property is giving you $1,000 a week. Now 50 weeks, that's more than 50,000. At the same time, you net about 75% of that. So call it just under $40,000 that you would be netting after you pay your rates, your insurances, all the fees.
Property manager fees.
Well, your property management fees. And even if you didn't pay any debt off over that time, so, say we used a 20% deposit, so you owe $400,000 or 500 owe $400,000. Your interest, if you're paying 4% interest, which would be about the average, be about $16,000, you'd net more than $20,000 a year in rental income. Forgetting the fact that the property hopefully is also growing each year as well. So the rents go up as well. It's often a forgotten thing, but $20,000 a year is very, very hard to find. It's very hard to find $20,000 a year for doing nothing.
Plus, you get $20,000 a year income. And your value's gone up as well. Even though your debt hasn't been paid off, you're still generating equity over that period.
Correct.
Not a bad gig.
It's the forgotten part, and a lot of people sort of think, you got to sell your properties to get the wealth at the end of whenever your period is for investing. You don't have to, because the properties might actually give you a very decent income for yourself, to the point where if you want to scale back the hours, you want to retire, whatever. So yeah, good one. Good little tidbit there. We've run out of time, so we'll park those next two, throw it over for next week. You may be back. I would run a sheet just in case.
Mate, I'll be paying good odds to be back.
Well, I don't think Alex is flying back with Rex from New York, so there's every chance that gets cancelled.
Yeah,
it's been an absolute pleasure. 2 weeks in a row. We're going to keep you for the quick shots later in the week as well. Any last words? You want to say anything to the fans you've built up over 2 weeks?
Is there any? Nah, look, it's always a pleasure to be here. I'll have my run sheet running week by week, so at any stage, tap me on the shoulder, James, and I'll be here in a moment.
And if anyone is listening, we do put this on YouTube, and it'll make for interesting viewing this week, because you'd have a side profile of Mitch's face. He hasn't quite figured out where the camera is in the studio here.
Yeah, which is odd, because I thoroughly enjoy a mirror. But
all right, have a great week, guys.
See ya.
Thanks for listening to another episode of The Double Shot with your favourite cousins, Alex and James Fitzgerald. If you've got a burning question or something we absolutely need to talk about on the pod, please write to us. Both of our emails are in the show notes. For little real estate tidbits and a little bit of banter, a lot of banter, you can follow us on the gram. Our handle is thedoubleshot.podcast. That, my friends, is thedoubleshot.podcast. Until next time, think of us when you sit back and sip your next double shot.